Hello, traders. It's 8:03 a.m. Chicago time on Thursday, the 24th of September, 2020. This is episode number 1844. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as we would expect, continued selling, although a choppy session in the extended hours in the U.S., but continued selling with the NASDAQ leading to the downside, down 1.36% or 147 points. The NASDAQ's at 10,676. The S&P follows, down 26.5 points. It just started to make a run for new lows here. It dropped about 15 points in the last half hour or so. It's down 28 and a quarter, trading at 3203, 0.87%. Allocation is clearly to safety. The cable is stronger. The bonds are only up 13 ticks. You'd expect them to be a little bit higher. And the Bund is up 37 ticks. The dollar is up 12 and a half cents, and the 10-year note is up 2.5 big ticks. So that's where we stand in terms of the calendar. We did get some key figures today. The IFO business climate out of Germany, a key figure, came in stronger than forecast. Forecast at 93 came in at 93.4. The initial claims came in at 870,000, slightly higher, which is worse. 870,000 versus 840 in initial claims. And then what we have remaining is Bank of England's Governor Bailey at 10 Eastern. Fed's chair. There goes the cat. Hang on. I think the cat has something to say. Fed's Chair Powell also at 10. We also get new home sales month on month for August at 10. And so on and so forth. Feds Evans and Feds Williams at 1 and 2 o'clock Eastern, and then this evening, GFK Consumer Confidence. So a few things on the calendar here, but mainly the reversal yesterday lower as New York furloughs about 6,000 employees. And initially, the move started with that news, and then I think it just moved on its own power as more and more people dropped. And so there it is. So that's where we stand this morning or yesterday in our review segment. There's something I have to say here, because a lot of the stock zone areas that I talk about in the morning have been respected. This isn't always the case. Have been respected by the market, as we've been talking about, and I have to say, I keep getting these messages telling me, "Yeah, but the trend is down. Why are you talking about the market moving up?" And there's something really missing here. In terms of a trend. So I'm not going to do a trade wisdom segment here, but I want to make sure that traders are well informed. This is the whole point of the Trader Bite. This is me treating everyone here in attendance as if they're one of my prop traders, right? And as a team. And here's the thing that grinds me the wrong way about trend. Somebody could say, "Yeah, why are you talking about the market moving higher? The trend is down." This is like me coming to you and telling you, "I'm willing to pay 10 million for your house." 10 million. 10 million. Yeah, okay, it's worth maybe $250,000 on the market, but I'm willing to pay 10 million. Take it or leave it right now. Sign here. Would you sign? Would you sign? No, you wouldn't. 10 million what? 10 million yen? 10 million pesos out of Venezuela? 10 million what? I have no idea what you're talking about. I have no idea what you're talking about. So when we're traders and we talk about trend, you have to define the time frame. Yes, the big time frame trend, the swing, is maybe to the downside. But the bigger time frame trend is definitely to the upside. Still is, still intact. We can see it. We can see it in the composite chart right here. So let's zoom out for a minute and look at trend in that time frame. Is this a downtrend to you? Does this look like a downtrend? This looks like a higher low, the COVID higher low, right? But it's an uptrend. COVID was just a pullback. But on maybe a couple of week basis, we have what looks like a downtrend. On a day basis, it could be an uptrend. On an intraday basis, it could be a downtrend. On a 5-minute basis, we may be in a pullback uptrend on a downtrend daily. So please, if you're talking to other people or if you're listening to someone talking about trend, if they don't define the time frame, then it's bullshit. It is absolute bullshit what they're telling you. It could be throwing off your trading day. It could be forcing you to lean in a way that does not match your time frame. It is that deal where somebody shows up and says, "I'll pay you 10 million for your home." So just let's get that out of the way. So if you're in here and you're chatting about how it's going to sell off over whatever, then define your your time frame. Otherwise, shut up, because it's confusing. I'm always talking in the terms of a time frame that is defined. I'm a day trader. I'm looking at what's happened in the big parameter, big time frame, and then I'm looking at what we're doing today, because that's what I'm trading just today. Okay, so I apologize if this comes off as crude, but I've sent this message out before. I've talked about this before. It just continues, like all these comments that I end up rejecting to my trader bites, like, "Oh, you're confusing people because the trend is down." What are you talking about? I have no idea what you're talking about. I don't know. You don't know. I don't know what your trend is. You haven't defined it. So you're just spewing garbage. Sorry, but it's the truth. Here's what we're looking at. So we were looking at today, yesterday, we talked about what? We talked about the market likely turning down. So the primary scenario is a push down. Okay. The secondary scenario is an initial test down and then continuation in a one-time framing up, and the next key area to test was higher, 3340. The third scenario, which is an off-balance scenario, simply because we've had a pullback, we're opening slightly out of range, is to test up, and then to break in a trend lower, was looking for 3270 on that. Basically, scenario 3 was what's in play, but no matter what, yesterday's key move was to the downside, and that's in the day time frame. The trend was down. And so here's what we got. So I have no attachment to a bias. I don't have an attachment to the market moving up or the market moving down. I'm trading in my time frame. That's why I can be here for the long term. And I just look at my time frame and I trade my time frame, and in my time frame the trend was down. Now, I didn't expect it to push as hard. To me, scenario 3 was done right here. Expected a pop back up somewhere to mid VWAP, and we are done for the day. It had more in it. It ended up taking out the low of the RTH session the prior day. And continuing, it took out the naked point of control from 2 days ago, and it started to balance out in the, I believe it was the 32-35 area. A nice chop here, nice zipper, and started to break lower. A lot of volume on the close, bringing the point of control to the low end of the range, And so what this does is it turns a trend day down. Look at the IB. The IB is way up here. These two yellow lines are the first hour's range. This is the highest volume hour of the day. Um, and we have basically created multiples of that IB on the way down. Essentially, this is a pretty decent trend down. It tested above, failed to hold above, which was what was expected. Remember, we expected a test higher, right? A test up and a push down. A test up and a push down, of varying degrees. But what it did is it had a bearish engulfing day, and it finished near lows. The expectation, as always, when that happens, is the auction was cut off by the end of the session. It was artificially cut off by time, and so we expect that the market will likely to continue lower in the overnight session, which brings us to the next chart, which is the full extended full session. Really strong volume, decent volume, 387,000. And we open, we pop up, we open, and we immediately fulfill that the process, the auction requirement to continue in the same direction until the opposing force is found. So we're going to offer lower prices until we get enough buyers to turn the market back up, and that's why we expect a lower low on the reopen. Okay, so it accomplished this almost immediately, found buyers, came right back into this high volume node. So we've got a big zipper area right here, as I just outlined. A high volume node tested almost to the top of that high volume node zone, and then failed, and it was sitting sideways until we broke lower just now, creating a second distribution, a lower distribution. We just broke lower about a half hour ago, and that's where we're holding. We're holding against a very important area here. Okay, this is the composite going back to December of 2019. This is a composite volume point of control. This is the most traded price zone since December of 2019. There's a lot that happened since that point. We went far below this point, and we've gone far above this point, and here we are in the middle. This is a big area. And so what's expected in this area is quite a bit of chop. So coming into today and tomorrow, unless something changes, unless some news pushes the market away from where it is right now, you have to be really careful because it's likely to be quite choppy. It's going to be either a high volatility back and forth open auction, or I shouldn't say it's going to be, it's likely to be a high volatility back and forth auction, open auction, or it is likely to be quite compressed, consolidating. We may start to see the market kind of creating one of these big triangles or compressions, or a downward skewed compression or whatever. But in either case, it's not inviting to a breakout type of methodology. Depending on your time frame, it's probably not conducive to a breakout type methodology as we push into and hold this high volume node area. Very important to consider, very important to note. I expected this as far down as 97. Here's what I put in my well, let me take a screenshot of it because I don't want to show people's names. But this is what I posted in the Head Trader channel yesterday. This is right, I'm going to grab a screenshot right out of our, sorry, hang on. This is from our head trader channel at Convergent. And what I wrote is right here. What I want to highlight is right here. Most likely we'll take out the 3207 composite point of control, 3207.50, and push toward 3197. Trend day down with a close at the low in the ES and NQ, likely to continue lower. This was at 3:01 p.m. Chicago time yesterday, and push toward 3197. 3197. Remember that number. Okay, so with 3197, here's where we are. 3199.50. We've already taken out 3207.50, so we've fulfilled that likelihood, that portion of the auction. I'm not saying I'm a genius predictor. This is just standard auction theory. We pushed through the 3207.50, and we are likely to push down into 3197, and we're at 3199.50. We're about 10 ticks above that. Okay, and the way to see that is to see that the point of control yesterday was at the low of the day, trend day down. It took out the entire range. It tested above Tuesday's high. It tested above Tuesday's high, found sellers, couldn't find buyers, transitioned all the way across Tuesday's range. That now becomes very bearish. Transitions across Tuesday's range, then moves the point of control to the low of the day, and then the auction is cut off. High probability play lower. Where do we go if we are? Where are we likely to go if we go lower? We're likely to go to the composite point of control and the next divot below there, the next stock zone below, which comes from a double bottom from way back. Okay. So that's where we stand, and this is on a move that was, 100 points or something, close to 100 points now. Actually, it's been more than 100 points. Yesterday was, I think the high was 33.12, something like that. Let me double check that. The high yesterday was 33.12.50. That's the narrative in the story. Anyway, so that's where we are. Just remember, there's a pretty decent volume up here, and overall, the delta yesterday moved with price. Look at these towering negative deltas on these bars. These are 15-minute bars. Very, very clear participation to the short side, not only in the rotations but in delta as well. And then this morning, we're kind of seeing the same with delta picking up to the negative side on these moves. So we have price and delta moving in the same direction, meaning that there is aggressor participation on the sell-off. It's not just moving lower on thin volume. Very important to note. I've gone way over my time because I'm in rent mode today, I guess. So let's take a look at what we're expecting for today. Well, one thing I want to show as a way to kind of set you up for how things are playing out here. This, I guess, would fall under review. We impulse, pullback, continuation, push, pull, expected continuation higher. That was the prediction with a take of 34.14. Expected it to push higher, expected it up here in the 3,500 area, 34.90. That was the prediction from last Thursday or something like that. And what it has done this week is it has pushed lower, pulled back, filled the gap right up here, pulled back, and has failed. And what this is starting to look like is another transition down. And what it's going to likely do is move into the next, let me highlight it. See this box here? The next balance zone. So we tested this point of control, 32.16.75. We stopped at 32.17.75. We talked about this 2 days ago, and it is likely to continue down this range. And so this profile becomes important now. Now we're looking for what is the low volume node, what is the next high volume node, what is the next low volume node, what's the next high volume node, and so on and so forth. This looks like it is not done, and it is likely to continue lower towards 31, looks like 31.75, 31.80 for now. Okay. So that's where we stand. Again, let's take a look at what's expected for today. Way over my time. This morning, the the overall inventory is just slightly to the short side. Not expecting much correction to the buy side on the open. I'm expecting that it's likely to continue lower immediately on the open. Looking for it to push lower, test this overnight low. We'll likely get a strong push into these bottoms, the low volume node in the overnight session, this 3210 region, and it's likely to push through and become responsive. I expect and suspect that the overnight point of control, which coincides with yesterday's point of control, right? Yesterday's point of control. That area, the 3225 area, is likely to be tested after an initial test down, consolidate, and then we're likely to test the range and move across the range. Again, this is, to me, any movement away from here is likely to turn and push up. Again, it's the composite point of control. Composite point of control here in play. This is the wrong color, but it is what it is. Secondary, responsive buying back into the 3210, pushes to 25, consolidates at 25. We get the impulse down, and this starts us out on a mini sell-off. Starts us out in the direction of a mini sell-off. Move over to 3180 or so, and then expecting a strong bounce back up into the close. We're likely to try to move away from the gravity of this composite point of control region and come back to it. That's the point. If we push higher, I would expect it. So scenario 3, because we're off balance here. Scenario 3, test down and an impulse up, consolidate, push higher. I expect that the region of 3258 here is likely to give us some resistance. 3258, the low volume node, the prior day's low, this area right here, is likely to hold us up for a push back down. That's scenario 3. It's a lower probability scenario. I'm expecting that we are likely to continue lower immediately and then test back up. This, of course, is scenario 1 over here. Okay. Sorry about the rant, but hey, it's people have to be told what they need to be told. Just remember, when somebody's talking about what the market is likely to do, make sure you check the time frame. Good luck, and I'll catch you tomorrow. By the way, if you missed the bookmap webinar that I did yesterday, the Pro Trader series, it's been posted on my Twitter feed, twitter.com/FuturesTrader71. You might want to catch it. It's a really big, it's an overview of the errors that most traders make and what we need to do to have a robust approach to the market, no matter what method we use. Try to find that, twitter.com/FuturesTrader71. Good luck.